Welcome back. The Russian attack on Ukraine, soaring energy prices, and the Paris Climate Accord should all combine to result in a more concentrated effort to phase out fossil fuels and more concentrated action on climate change. That's the view of Tom Rand. He's managing partner at Arcturn Ventures. That's a company that helps invest in companies engaged in the struggle against climate change. Tom Rand, thank you very much for joining us. Tell us about the war in Ukraine. Has it changed the lie of the land in terms of the fight against climate change?
Well, there's nothing like physical insecurity to focus the mind. So the kind of physical insecurity that is being felt in Europe right now has a cause. It's Russia. And there's a limit as to how hard Europe feels it can push back, given they have an awful lot of natural gas coming out of Russia and oil. And what we're finding out is when the mind is focused and when it's made a priority, just how fast one might be able to get off fossil fuels and reduce emissions. There are now plans in Europe to increase offshore wind by an order of magnitude by 2040, 2050 timeframe. To put that in perspective, that is enough to provide electricity for all of Europe plus. And as they electrify their transport sector and those batteries come into play as mobile energy storage, you really see the possibilities. The point, though, is that the physical insecurity from climate risk is there. It's in the future. It's thought to be abstract by many people, and there's always a reason to push out it being a priority. What the Ukrainian war has done in Europe is made it a priority, and what we will see in the coming decade is how fast we can get off fossil fuels, contrary to the naysayers who've always said we can't do it. It's hard, but now we'll see how fast we can do it, and Europe will lead the way.
It took a crisis then, and almost an unprecedented crisis, to focus the mind and action of political leaders.
Yeah, that's right. And I think as this plays out, what we've seen so far is a lot of pressure has been put on the supply side of fossil fuels, right? Fossil fuel companies have scaled back to some extent exploration budgets and so on, anticipating there being sort of a peak demand for their product. That will lead to price spikes, right? And these are decades-long decisions. Coupled with that lack of exploration capital, which I think is a smart move, now we see a commensurate increase in capital being deployed on the renewable side. But again, these are decade-long changes. You can't turn this stuff on a dime, either getting off fossil fuels or getting onto renewables. And so now we're beginning to see strategic focus, strategic decisions being made about the next decade or two in order to counterbalance the lack of capital that's going to get put into fossil fuels. So I think that evens the playing field a little bit.
That decline in capital spending growth, at least, that you've referenced among the super majors, putting proportionately less money into exploration and future production, is often credited for the very high crude oil prices that we're seeing now. They translate, of course, to higher gasoline prices at the pumps, not only in Canada, but in other countries as well. And many Bay Street and Wall Street forecasters see those high crude oil prices persisting for a couple of years. How does that figure into the equation, these historically high oil prices?
Look, oil's gone up and oil's gone down. It always has, it always will. The question is how much of the current price spike is due to lack of exploration? I would say very little. American shale oil flows. I mean, this is macroeconomic dislocation because of Russia. However, every time this happens, we have the same discussion. This time, the discussion is a little bit different. It's not about high gas prices and maybe we can get renewable. By the way, there's a great report out of BNP Paribas in Paris that asks the question, what does oil need to be priced at long term to compete with renewable energy as a transport fuel at today's prices of renewable energy, assuming all the infrastructure? It's between $12 and $20 a barrel. Long term, that's what's going to dominate the economic cycle of oil. Only those producers who can produce it at that price will survive. But that's, again, 20, 30 years out, right? In the meantime, there is a shortage of supply and geopolitical instability causing a price spike, which focuses the mind in all kinds of ways. What I hope comes out of this is the strategic benefit for all of us in having local control over energy supplies. Every country on the planet has an enormous amount of renewable resources. It's different. It's wind or it's solar or it's biomass, but every country's got access to it. And the history of standing armies to keep supplies and paying for the keeping of supplies flowing from very unstable parts of the world, including Russia and the Mideast, those could be gone, right? Climate hawks 20 years ago talked about this. We're talking about it again now. The agreement between the climate hawk and the military security establishment now should really focus the mind that it's in all our best interest to build out massive renewable capacity locally.
Okay, we are almost out of time, but you said in some notes in anticipation of our conversation that the next global battle will be control over production of clean energy technology. That's an interesting notion. You don't have a lot of time, but flesh that thought out for us.
Well, look, Canada's got some great horses in the race, and I think the best contribution we can make to our own economic security and global climate security is to export solutions like hydrostore, woodland biofuels, next generation storage, next generation ethanol, that kind of stuff. So we'll compete. People are competing for supplies of lithium. This is the next great battle, and Canada's got some horses in the race, and I think that's a great place for us to start. Tom Rand, managing partner at Arcturn Ventures. It invests in companies engaged in the battle against climate change and sustainability.